Hello, everyone. Today I will discuss a new topic called organizational structure of a corporation with respect to finance function. In my previous session, I discussed about how financial management is related to other discipline like economics, accounting, marketing, production, HR, IT, psychology, etc. So in today's session, you are supposed to learn the organizational structure of a corporation. When we talk about finance and related functions, then what are the activities performed by different peoples involved in the finance department of an organization? And for that, you need to understand the entire organizational structure of a corporation. So these are the contents which I'm supposed to cover in this session. Like you will be knowing organizational structure of a corporation, organizational structure of finance department, functions of CFO, who is the top authority of finance department of any large organization. Then I will summarize what I have discussed, what I'm about to discuss in this session. But before learning the organizational structure of any large corporations with respect to finance function, you need to understand who is called finance manager. So, finance manager is a person who is authorized, who is performing the functions of managing the financial affair of any organization or any entity. If you are individual, you are performing the functions related to finance, you will be finance manager for your own. If you are working as an employee, you are working and your task or responsibility given to you is to perform finance related functions. So obviously you are the finance manager for that particular company. So finance manager is a person who is performing all the finance related activities in any organization or in any entity. And whatever is the financial affair of any organization, what is the financial affair? Financial affair is to mobilize the fund. Financial affair means to mobilize the fund and its effective utilization. When we talk about mobilization, it means how to raise money, how to make the use of the money. All these things you will be learning. So mobilization, what are the financial affairs of the organization? Mobilization of fund and utilization of fund. These two are the important functions of finance. So whosoever is performing these functions will be called finance manager. Now coming to the organizational structure of a corporation that you need to understand. For any large organization, who is on the top? On the top, you will find owners. In case of companies, especially joint stock companies, whosoever holds maximum number of shares is called whosoever is holding shares called owner of the company. So in case of companies, corporations, owners are shareholders because they contribute capital, they give capital to the company to do business, and they are scattered in different part of the world. But exactly the organization or corporation is managed by board of directors, some experts, a team of people experts. They are called board of directors. Among the directors, one is the chairman, which is appointed by the shareholders. Then board of directors appoints different managers with respect to marketing, with respect to HR, with respect to finance. Now coming to with respect to finance, or you can say there is one top authority appointed by board of directors called CFO, CEO, Chief Executive Officer, and they have different other like chief, you can say operating officers for business, and CFO, chief finance officer. So in every organization, you will find little bit changes will be there, but almost this is the hierarchy of the people in most of the organization, especially in the corporations. On the top, shareholders are there, board of directors, and then at lower level, you will find employees are there. So chief operating officer, then CFO, chief finance officer. Now when come to finance department, actually finance department having another organization, just like organization has one structure where top authorities are there. CEO is the head of finance officer, marketing manager, production manager, HR manager, operation manager, IT manager. Now coming to finance department, the chief authority of finance department is largely chief finance officer, who is the chief authority, who is the top authority of finance department of any large organization. Now, under Chief Finance Officer, some other officers are also working, like Vice President of Finance or Finance Director is called, who is looking after all the finance related functions, who is involved, who is engaged in regulating administration of finance related functions. Then head of the tax is also working under CFO. Now, financial controller under finance director, there's a hierarchy. Below them, financial controllers are working. Their job is to control the cost. Their job is to control the finance activities in tune with maximization of return. And they have to minimize the risk. They have to create the value for the firm. So if any finance related activity is not going as per the norms, as per the standards, so financial controller has to intervene. They have to play the role of controlling the diverted finance related activities. Then head of the finance operation, like when we call like any finance related company, take the example of a bank or broking firm or mutual funds. If you visit any office, you will find in these finance related companies, some of the peoples are working on the desk. If you visit any premise, any office, you will find some of the peoples are working. So those people are called operation people. So operation related activities are many. Like if you go to bank, some person is dealing with the distribution of cash, some person is engaged in accepting the deposits from the customers, some are engaged in doing RTGS or making a demand draft, or some people are engaged in loan disbursement, financial consultancy, etc., etc. So all these peoples are who are sitting in the office, they are called operation people. Now, in case of operation people, AP, that is accounts payable. There's one department, accounts payable, especially when account payable means this department is looking into all those activities where things have been purchased on credit. Things have been purchased on credit, and after certain period of time, payment has to be made. So this department will ensure proper liquidity as and when amount is due, then make arrangement of finance. Suppose there's a manufacturing company, raw material has been purchased, and company got the credit facility of 30 days. So raw material has been purchased on credit, its payment has to be done after 30 days. So accounts payable department will ensure that after 30 days payment should be done. There must be sufficient provision of finance at the time of payment to creditors. There are many creditors, like trade creditors maybe, or some fund has been borrowed, so payment has to be made to them. Even banks are there, short term credits has been taken. So this department is ensuring if proper liquidity, if liquidity is not maintained, then the value of the firm will adversely be affected. Try to think like if you have borrowed money from so many person and you have promised to pay at certain point of time, but if you deny, if you are not able to pay at the time of at the time what you propose to pay, then your value will decline in the eyes of the lenders. Similarly, we have a account receivable department. This department is dealing with the management of receivables. Mostly it happens Like take the example of bank has given loan, so after a certain period of time the loan has to be recovered. So proper scheduling has to be made, from whom, how much amount, at what date, interest calculation, etc., has to be incorporated and has to make a list uh, in order to recover the timely amount. Otherwise, financially, your organization will be adversely affected in case of need of the fund. Fund is not available because your organization has not been able to recover the due amount from the debtors. So, management of receivables, like if goods are sold on credit basis, so amount has to be recovered after a certain period of time. Or if um, organization has given money to somebody has borrowed money from the organization, so organization will recover, so that amount is receivable. Similarly, payroll department, the task of payroll department is to maintain the records of how much salary is due, how much commission is due, at what time salary has to be paid. Revision of salary is required because after the each and every year, or as per the norms of the company, salary has to be revised, incentive calculations, etc. It has to be maintained. Like when company is giving salary to their employees, then government of India has given one more task, that is deduct the tax, TDS. So calculation of TDS and deduction of amount, and submitting to government treasury, etc. So this is the work of payroll department. Then financial planning and analysis, this is another department. This department is engaged in making estimation, financial planning and analysis, to estimate the requirement of funds, to estimate uh, where fund has to be invested. So this department is concerned with investigation or estimation of use of the fund with respect to their profitability, whether risk is there or not in case of investment. So it has to be assessed, it should be analyzed. When fund is borrowed, then obviously planning has to be done. It has to be estimated how much fund will be required, then accordingly from which source it has to be acquired, what should be the structure of the capital, and leverage benefit is there or not. So each and every calculation is done by this department. So this is the general structure of finance department of any organization. When you visit finance department, so such kind of peoples are little bit slightly, uh, some structure may vary from one organization to another. If it is a service provider, maybe little bit organization structure will be different. If it is a manufacturing company, then the structure of finance department will slightly be changed. Now coming to the top authority of finance department, we call chief finance officer. So what is the role, what are the functions of chief finance officer? For example, in future you become like chief finance officer. So what are the functions, what are the responsibilities you are supposed to perform, you are supposed to do? One, the most important function is financial planning and analysis, to estimate, to forecast how much will be the fund requirement in future, how much will be the return on investment which you are supposed to do. So scenario modeling, things are estimated. For example, estimations will be done with respect to their production, and on the basis of, for example, you came to know during 2026-27 production is likely to go up by 20%, then accordingly you have to think about making provision of finance, because as compared to last year, in coming year, the requirement of fund will be slightly different. So you have to make, and this is the role of top authority of finance, to make arrangement of fund as and when it is required. So unless it is not estimated properly, it is not like modeling is not done in order to estimate, it will be extremely difficult for finance manager to perform their task. Capital allocation, whatever funds are raised, it will not be kept, it has to be allocated into most profitable channel. Like bank is receiving deposits from their investors, and how this money will be allocated, there are so many options. One industry is applying for the loan, one entrepreneur is applying for the loan, one government employee is applying for the loan, one person is struggling in the market with respect to their business is also applying for the loan. Farmers are applying for the loan, students are applying, industrialists are applying for the loan. To whom it should be allocated? Some government norms are there, regulatory norms are there. So following those norms and keeping in mind the profitability and best use of the fund, it has to be allocated. So all these important, or you can say top level tasks, are performed by the CFO. Mergers and acquisition management. This is also one of the decisions in finance. Who will decide? Top authority of finance. Suppose company A proposed to merge with company B. Then, being the CFO of A and B, your role is to know how much is the value of your firm and how much value you are getting after merging or after amalgamation. So all those estimations has to be made by the CFO of the organization. They have to ensure that the value is restored in case of amalgamated company. Value is restored in case of amalgamated company. So this is one of the important functions of CFO, is to make proper planning, and obviously planning is always at the top level. And CFO are working at top level of any organization. Capital and treasury operation, like cash flow management. Treasury operation is concerned with maintaining liquidity, maintaining cash. How much cash has to be maintained? It should not be excessive, and there should not be shortage of cash, because excessive maintaining excessive liquidity is adversely affecting profitability. It means that amount you are just keeping in order to maintain liquidity, you are not using it for profitable purposes. But if there is a shortage, most of the fund you have used somewhere in order to maximize profit, then liquidity will be affected. So finance chief finance officer has to maintain proper trade-off between liquidity and profitability. So they have to understand their financial flows, inflows and outflows in future and current, fundraising, from where fund has to be raised. We have so many sources, cost has to be calculated. So on the top, CFO has to decide whether fund has to be raised by issue of equity shares or by issue of bonds, or fund has to be borrowed from financial institutions or bank or finance company. So all these decisions, keeping in mind the cost factor. So the best decision is one where cost of borrowing or cost of raising fund is minimum, with, and as well as risk factor also you have to see. Investment management. Largely whatever fund has been acquired, it has to be utilized somewhere. So utilization has given birth to new subject called investment management. So this task has to be undertaken by chief finance officer of any organization. How their fund is being utilized, they have to keep monitoring the uh, investment activity. They have to estimate the earnings, as well as they have to estimate the risk aspect, risk factor related to investment activity. When we invest, we have many options, like we have so many projects to invest. Which one will be more profitable? Which one will be less profitable? It has to be estimated, it has to be ascertained, and then only decisions can be taken. Then banking relations, like every organization has networking with banks. Banks play a very important role because they are receiving the payment on behalf of the company, and quite often every organization has to deal with banking operations. So networking relationship and management of all those banks uh, in tune with getting maximum benefit to the organization. CFOs have to perform this task. Then we have governance, risk, and compliance. Like governance, like as far as accounting aspect is concerned, generally accepted accounting principles. Some international norms are there, international financial regulations are there. So whether all those international regulations are complied by the company or not, when we talk about accounting, so all those international standards are being applied by the organization or not. So it has to be ensured by the CFO of the organization. Financial reporting, all the important documents, finance related documents, like balance sheet, income statements, etc., and equity market filling. All these important documents has to be it has to be reported. It has to be verified by the chief finance officer. So with the, you can say, chief finance officer, along with the accounting department, along with the auditor, along with the accountants, they have to finalize that document, that is annual reports of the company. So this is also one of the important tasks of chief finance officer. Internal control framework, like internal control is concerned with there should not be any fraud, there should not be any data leak. Sometimes informations are confidential, it should not be leaked. If it is leaked, then there will be different impact in the secondary market. So it has internal control, internal, like you can say, control over all the financial activities has to be undertaken by the chief finance officer of any organization. Tax optimization, obviously, we have seen big companies are paying huge amount of taxes, but if they analyzed the current scenario of the country, then lots of tax benefits are offered by the government. These tax benefits are like in the form of tax exemptions, tax deductions, tax subsidy, you can say tax benefit, tax holidays. So, in number of ways, tax benefits are offered by the government through its, you can say, tax laws to different companies. So, it is the duty of finance officer to get the maximum use of all those tax benefit. In this is called financial planning, or you can say tax planning. Legitimately, you have to minimize your tax liability. If you are able to minimize tax liability, ultimately it will be beneficial to the all the stakeholders of the company, especially shareholders. Then enterprise performance and technological integration, like cost control optimization. Obviously, a lot of activities organization is performing, whether with respect to production, with respect to fund mobilization, with respect to investment. Cost factor has to be taken care of. So at the top, CFO has to play important role in controlling the cost. And then digital transformation, like many softwares are being used, like ERP software is used by many organizations in order to handle the finance related activities efficiently. Softwares are always to assist, softwares are always to uh, make you efficient. So in order to make the financial affair of any organization efficient, CFO has to play a role. They have to incorporate, they have to use some of the softwares in order to make the financial task efficient. Stakeholders management. For every organization, plenty of stakeholders are there. Governments are there, they are expecting something in the form of taxes. Shareholders are there, they are expecting value creation, they are expecting returns, profit. Employees are there, they are expecting incentives, hike in their remuneration. Laborers are there, suppliers are there, they want like proper commission or proper, you can say, pricing for their product or whatever they have supplied to the company. So even society is also expecting something you contribute for the upgradation of the society, like for social purposes, like giving charity, for promotion of science, promotion of sports, or giving scholarships, and plantation drive. So if there is any kind of you can say campaign run by the government for welfare of the society, so it is expected corporation should come forward to donate generously. So all these activities has to be, and 2% CSR, corporate social responsibility. So that management of social responsibility related activities has to be managed by the CFO of the company. Cross department mentorship, like finance department is not working in isolation. In every organization you will find a number of departments: marketing, HR, production, IT, and finance. So all these finance department especially has to make proper coordination with each and every department, because their role, their responsibilities will be determined, will be decided, will be ascertained on the basis of demands, requisitions, and some of the, you can say, estimations done by the other departments. So, to sum up, what you need to understand, why this session was for you. You are enrolled in financial management programs. You are supposed to learn finance. Professionals are there. If you want to become professional in the field of finance, you have to understand what are the what are the roles you have to play, what are the functions you have to perform, and how to perform those functions in effective way, how you have to well verse with the knowledge of IT, how you have to be in touch with other departments, how other disciplinary areas are important for you. So each and everything is extremely important for you, and if you are really in touch with all those things, you are up to date with the economic you can say information about the country, what's happening in the country, how a stock market is performing. So you have to be well versed with the complete knowledge. The more knowledge you will acquire, the more knowledge uh, you are analyzing, better finance related decisions you will be able to make. And that's why the objective of this course is to make you skillful. If you go to any organization and you apply for finance related jobs, or if you perform finance related functions, so by virtue of your knowledge, by virtue of your skill which you are getting, and skills are obviously when you will do some practical internship after acquisition of the knowledge, so that knowledge will going to help you in extreme way to improve yourself in terms of your career. If you are more skillful, most likely you will be promoted in the organization, most likely you will be having more value in the organization. So try to learn as much as possible. The more you will learn, more knowledge you will get. And acquisition of knowledge will give you something, we call it wisdom. The more knowledge you acquire, more information you search, you will get knowledge. More knowledge you acquire, you will get wisdom. And what is wisdom? This is the highest quality of a human being. If you have acquired the wisdom of finance, it means it is a quality which make you to estimate, to make analysis, or to in extreme difficult situations, you will be able to make decisions related to finance. So situation is nowadays very complex worldwide. So in this complex world, in the complex situation, in a difficult situation, if you want to survive, if you want to perform, you have to acquire the knowledge of finance. You have to learn. You have to gain from different sources. This course may be one of the source where basic and fundamental knowledge, which is extremely important. From this particular course, you will get basic knowledge of finance, fundamental knowledge of finance, and the same knowledge is imparted by any reputed organization of the world. This syllabus is universal. You cannot say this syllabus is confined to this particular course. When you open the syllabus of financial management, you open the syllabus of management of any reputed organization, any reputed education institution, you will find in financial management all the same things are taught. Only approach is different, environment is different, and orientation is different. So I hope if you are sincere, you are hardworking, you are committed in terms of attending the sessions, in terms of learning from different sources prescribed by experts, then definitely you will be in a very good position in terms of your career, in terms of the best thing is you will be satisfied, and whatever task related to finance given to you, you will be able to justify it. So this is all about organizational structure. I have discussed how every organization is structured. On the top, who is normally shareholders are there. They are the real owner of the company. They provide finance with respect to profit or loss. They don't mind, like they are just giving finance. There's a possibility that they may lose money. They may earn money as well, but they may lose money. So, but other stakeholders, why they are not on the top, like shareholders. In one slide I have shown you there are many stakeholders in the company, but in the structure, one of the structure you have seen shareholders on the top, because they are the real risk taker in the company. They are the real risk taker of the company. Those have given loan, they are not concerned with risk. They want it, whether you earn or not, you earn profit or not, you have to pay, interest, and you have to return our principal amount. Preference shareholders also, they want assured return. They are not concerned with the losses. They want to enjoy the ownership rights as well as assured return. But only equity shareholders, and that's why equity shareholders are called real owner of the real owner of the company. Equity shareholders are called real owner of the company. They are the real investor. In case of loss, they are ready to assume the losses, they are ready to bear the loss. In case of profit, and that's why objective should be to give maximum return to shareholders. So this is what I have discussed in this session. And if you read it properly, if you listen the contents given by me, hopefully you will be able to understand uh, what actually financial structure is, how finance related to other discipline, and what are the authorities in the field of finance. Like top authority is chief finance officer. Other authorities are also there. Finance managers are there, assistant finance managers are there, vice president finance departments are there, and payroll managers are there, account receivable, like these are like operation departments. So operation managers are there, operation manager for finance related activities like account receivables, account payable, and payroll managers are there. So number of authorities are there. So each and every finance related authorities have to perform their respective task. But large, you can say, important tasks are performed by the CFO. Whatever is the intention of CFO, and accordingly you will find the people lower in the hierarchy will perform. So fate of the organization depends upon the timely action of finance department, efficient functioning of finance department, dedicated efforts of finance department. So, and how it will be possible? When they are well versed with the knowledge of finance, they are aware of what are the other discipline whose knowledge is equally important. So this is all in this session. Thank you so much.